Hey guys, and welcome back to another video here on the channel. If you're new, my name is Brandon. As always, we do have our Investing Academy, which you can check out below this video if you're a beginner to the stock market here in Canada. But in today's video, we're going to be talking about two stocks to buy right now. Two stocks that I believe, despite the crazy market that we're in, and I'm hearing talks of bubbles and craziness everywhere, these are two stocks that I think are offering some really good buying opportunities at the moment. This is our series where we cover, if you're new, a Canadian stock as well as a US stock, just to get a little bit of diversity. And unfortunately, these stocks are not new to the channel. It's always tricky being a YouTuber and trying to bring new stocks to the channel, exciting ones, yet at the same time talking about good companies. And today we're leaning towards the good old boring companies, which aren't flashy in any way, shape, or form. But it's hard to argue. I'm really liking these stocks at the moment. So hopefully they'll make anybody some good money if you go do your own research, look deeper into these companies. But the first stock that we'll be talking about for our Canadian component, it is the company TD Bank, Toronto Dominion Bank. I told you it wasn't going to be too exciting. The ticker that you're looking at here is TD.TO. And as a very brief background on the bank, I know we don't need to get into this, but we're looking at the second largest bank currently in Canada. That would be behind the largest bank, which is Royal Bank, but these two are really the top two players. The company is primarily based out of Canada. You'll see over half of their earnings are in the Canadian retail segment, but they do give you exposure over to the US, a very healthy chunk actually. And I like to think of this company very much as a North American bank play. If you follow the company, if you're in the investing space, you very well may be using TD Direct Investing. That's kind of their direct investing division. Over in the States, you have TD Ameritrade. They're really all over the place. And at the end of the day, this is just a very solid bank. That's just kind of what there is to say about it. The stock has dropped down on a year-to-date number. We're looking down almost exactly 20%. It's actually the reason why I included in the video today, because when you do see drops like this, to me, this is a bit of a significant drop in a company like this. It is kind of like a no-brainer to start looking either at chipping away at a position, or if you're new and you're looking for some financial exposure, maybe looking to add TD to your portfolio. Because despite COVID having a big impact on our entire lives, companies of all shapes and sizes, the banks are some of those stable companies that, don't get me wrong, they are still impacted. They're definitely impacted in the sense that when people are going out and taking on less loans, a recession in general, when people are out, not buying as many houses, not taking as much money from the bank, that is a negative. So COVID does have an impact on these companies. But compared to other companies, I think the banks are still some of those ones that you can rely on. You think to the way that banks make money, a portion of their business, it's from fees, right? Fees on your accounts, fees from, for example, TD Direct Investing or TD Ameritrade, commissions. Those don't stop due to the whole social distancing and the work from home life. The banking sector does have that kind of up their sleeve. It's a little bit of a hedge to, again, relative to other companies, which in many cases they can't operate anywhere close to usual. In terms of the dividend, which is obviously a big reason for investing in this stock, great dividend payer. We're currently seeing a yield up above 5%, which is just really an amazing starting yield. The payout ratio that we're looking at is right at 53%. So call it dead smack in the middle, paying out 53% of their earnings in dividends. What this tells us is that it's not only a sustainable dividend, but there's often room to grow that dividend going forward. This company's actually been growing. If we look at their past 5 years, going back, they've been growing at an average of just shy of 5%. And that's really what you can expect when you come across a big, stable, mature company such as a bank here in Canada, some of the highest quality banks in the world. The stock currently trades for $60.58 Canadian. Note again, this is the one traded on the TSX or the TSE, Toronto Stock Exchange. You will find the stock traded on the the New York Stock Exchange. So make sure you're looking at the right one there. But we are seeing a PE ratio of 10.6. It's overall just a very attractive stock. Again, Not the most flashy, but I think it's one that will really pay off if you are looking for a place to deploy some money in this cuckoo market. Moving on to the second stock for today's video, this is our American stock. It's another one that we've covered on the channel. It is the company Raytheon Technologies. The ticker is RTX. And this is definitely not as known as a bank like TD Bank, but this is a company that was recently merged. Well, the merger was completed in April of this year, April 2020, between United Technologies and then Raytheon, which were two separate companies. Now they operate under Raytheon Technologies. And this is a massive company that is involved in aerospace as well as the defense side of things. So defense meaning military, fighter jets and missiles and whatnot. What's fascinating about this newly formed company is I know Raytheon has never been people's favorite stock in the defense space. People like to look at Lockheed Martin and whatnot. But since the merger, I think their business line has actually really developed. Like instead of being super niche down into just defense, which is where they were, they now have the commercial side of things. Their portfolio has really widened when they've added in, when they've teamed up with United Technologies. You take, for example, one of the companies that came from the United Technologies side, which is Pratt & Whitney. This is a company that makes the big engines for commercial airlines. So they do fighter jets as well, but take a big Airbus. Pratt & Whitney is involved in producing these engines. You then match that up with Raytheon, which specializes, for example, in missiles. There's one called the Tomahawk missile, which is pretty well known and pretty cool. Together, you're just getting a really nice scope. And what that does is it kind of mitigates the risk in general, now that those companies are together. I think it's fair to say that the commercial side of things, so the flights that we would go on as normal people going from place to place, that will absolutely take a slowdown. We're already seeing that, and that may be the case going forward, but that doesn't mean that the military, that doesn't mean that the government stops buying equipment for the army and for the military. It's cool to have that kind of diversity, and it will really help balance and weigh each other out. One thing that is worth mentioning with a company like Raytheon is that they do report their earnings actually in just a couple days. So July 28th, they're set to report their earnings. And regardless of the stock we're talking about, it can always be a bit of a risky play, a bit of a speculation to buy a stock before earnings. I don't always think that's the case. I know some people really like to play that game and say, oh, I'm going to make a gamble on whether they'll post good earnings, bad earnings, and try to get in beforehand. To me, I don't really like to look at it that way. It's something to note that they're reporting earnings in a couple days, but still taking a look at the share price, I wouldn't let that be a deciding factor into buying or not buying the stock. At today's prices, the stock is down about 40% currently. It was actually down as much as 50%. And I wouldn't let the earnings coming up in a couple days stop you from buying a stock that you feel is offering good value. It's just something to be aware about, that you can almost expect a potential big swing in a couple days, but it could be in your favor, it could be against you. Over the long term, I think the way you should look at it is ask yourself, is $62 per share a good price to buy for Raytheon? And in my opinion, it is. It's just something that I think is worth mentioning, that we may see some swings over the next couple days. A bit of a positive that I think is worth, tagging into this little section, talking about Raytheon, institutional buying. And it's by no means any massive numbers when you look at the value, the number of shares that are owned here, but it is positive nonetheless to see a number of institutions opening positions into this company as of Q2, 2020 Q2. In terms of the dividend, Raytheon or United Technologies previously is, of course, one of the premier dividend payers. We're looking at a current yield of about 3.06% with 26 years of growth. So a consistent, solid track record is the type of history that you like to look for in a company. And it's one of the cool perks that you get for investing in a company like Raytheon Technologies, where one of their priorities is to reward the shareholders with dividends and as well growth if you're able to buy in at the right points. So with that said, I think that this is a really cool stock to give you exposure into the aerospace, the defense side of things. Again, a little more unique than the bank, but we have covered them before. Stock trades for $62 USD. It pays a 3% dividend, and Raytheon Technologies Corp is the second stock, our American stock, to buy for this video. So what do you guys think of my 2 picks for today? Again, it's no Tesla. It's no, I don't even know. I've just seen on YouTube a ton of crazy stocks being mentioned, and they're exciting. They're fun to look at. But at the end of the day, at least if you like my philosophy on investing, it's you keep things simple. You kind of take the boring route. You often do quite well. And you got 2 really solid dividend pairs in the stocks that we covered today. Also, what I believe to be trading at very attractive prices. If you enjoyed today's videos, you can give this video a thumbs up. You can leave your comment below on my picks. Do you like them? Do you dislike them? Do you have any better stocks that you think are worth buying at the moment? You can absolutely leave that down below. If you are new to the channel and this is your first time watching, you should definitely subscribe and hit the bell for notifications, because we post a video every week. Except for the last week, we've been a little bit delayed. I've just been having some crazy busy over the past couple of weeks with moving houses and helping with moving. I've been all over the place, but I am getting settled back in. We're gonna have more videos coming forward, so definitely subscribe and hit the bell for notifications. If you are a beginner to the stock market, you don't really know what you're doing, or you want help getting started, you can check out our Investing Academy. We have a program, a community that we are building here of Canadian investors, and we will walk you through step by step through the entire process, from getting your account set up, learning the terms and everything. Very, very simple, very, very easy to do. That'll be that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.